Welcome back, everybody. Up about 159 points right now. We've been all over the map. 1,000-point trading range. We were down almost 550 points from the get-go. Now up. It's ridiculous. I'm telling you, here's where I'm going to sound like the old guy telling you, in my day, we didn't have these creative market byproducts. You've often heard about the CBOE fear index, volatility index, the so-called VIX, and how it was exploding. Do you know they came up with a product to counter that? If, in other words, the market is tanking on fear, they have something called a velocity shares daily inverse short-term exchange traded ETF. Now, I only mention this because it actually compounded a lot of the volatility. It fell 14% yesterday, but as Stephen Guilfoyle, who was my special guest on Your World yesterday on Fox News, it suddenly accelerated after hours because, remember, it's a trading mechanism, a sentiment indicator you could use as a reverse to the volatility index, the VIX thing, which is silly to begin with, as if you can put a number on fear. That was falling 84%. So it was setting the stage this morning for added volatility, having nothing to do with the fundamentals. It was a built-in mechanism by which you could counter the fall in the fear index if you wanted to essentially short the fear. I know I'm giving you a mouthful here, but I'm telling you, we are veering away from simply buying and selling stocks and expressing sentiment, from looking at things like value. And I know my next guest would agree with that. He built a fortune getting away from some of these exotic products. He's the multi-millionaire investor, Foster Friess. And Foster, I'm telling you, a lot of these things come to light. I don't know if it will be this particular market hits portfolio insurance of 1987 or mortgage-backed derivatives or any of that stuff. But it's another created product to apparently shield you from market forces. And I don't think there is such a thing. What do you think?
Well, you hit the nail right on the head, Neil, because it's the individual company's fundamentals that eventually will carry the day. And in talking with my guys, they say 60% of the companies are showing increased estimates. It's quite bullish. And when the market runs up as much as it has, a breather is often expected.
Absolutely.
But your point about these VIX and all these different issues exasperated because they're dealing with traders who are more emotional, and they watch those non-fundamental issues, which are kind of trading vehicles. And I remember we always say never invest in the stock market. We tell our potential clients, invest in individual companies. And a couple fears we should be concerned about, though. For the first time in history, the Federal Reserve has physically attacked Wells Fargo. This is going to be
that was reasonable. A very big deal. You're right. That's going to be a $400 million hit on that institution, according to the Wells Fargo folks. But that's not just punishment. That could be wiping out an industry, at least its market value.
Well, what it does, it raises concern, is the Trump administration really serious about cutting back on regulations, because that looks like a regulation on steroids. And
who did this? It was the Federal Reserve, right?
Right, and then when that happens, Neil, a lot of these investors are now passive investors through electronic traded funds. And so if 36% of Americans' investors are in these now, when that ETF goes down with the banks, that causes people to create selling, and a lot of them on our margin perhaps. And so we have to have that as a new ingredient. A little bit what you're talking about, it's a synthetic issue that has nothing to do with the fundamentals of the stock.
No, you're right about that. But Foster, looking collectively at the market, especially the way they've been beaten down going into today, some have interpreted this as a reigniting value, if there's such a thing. In other words, that the market is cheaper now. Mark Cuban telling me he's buying, the S&P 500, the ETF there, because it represents fairer value, certainly than it did prior. Do you agree with that, or do you believe that this market might be a little rich, finding value in it might take a little while? What do you think?
Well, why it might be rich is if there is concern about rising interest rates. The truckers that my guys have been talking to are raising rates for shipping goods, which will increase the retailers' cost of goods, which puts prices up, and prices up, interest rates could be up. So that could be one concern. The other concern would be if the Democrats look like they're going to make some progress coming into the midterm elections, which could reverse the tax reform bill, much like the Republicans tried to reverse Obamacare. But by and large, the fundamentals are all strong, and people, I don't think, realize not only did the tax rate for corporations go from 35 to 21, but they get to expense things the first year they buy.
Oh, no, it would seem to grease the skids with more activity. Now, I'm told that bull markets don't die of old age, but actually a couple of them have. I mean, they just sort of peter out. This one is going to be 9 years next month. Is it getting old?
Well, it's more a function of the companies growing, and the companies that are doing well will be a lot larger 5 years from now. So the trick is isolating those. But I believe, too, what Americans kind of sense might be coming, which is what they want, is more of a return to civility. I think we see a lot of signs where civility is beginning to come back a little bit. There's an opportunity in the health industry, which is 20% of our economy, where as I go walking around the colonies, it's hard to find anybody who's opposed to the publishing of health care costs. Hillary supporters, Bernie supporters, Trump supporters. So if we can introduce, which is introduced, there's a bill in the Senate committee by Democrat Ed Perlmutter and Republican Mike Gallagher, two congressmen, that will cause all providers of health care to publish prices. You can't find anybody opposed to that. So if we can agree on that.
You could be right. You are optimistic. You're deeply religious and decent human being. You believe civility is returning. Foster, I don't see it, but maybe you'll be right. But Foster Friess, very good seeing you again, my friend.